silver is a recovery metal, and gold to some extent also, because if there's a total deflation and debt disappears, well, gold's going to be naturally worth more. In the 70s, gold and silver move opposite of the SPX. They did not behave like a recovery metal like they have been since the 2000s, where, like you say, there's a recovery because of the yields and all that dropping, selling US dollar, and SPX goes up and gold and silver go up faster. But in the 70s, there's periods where silver and gold went up and SPX kept going down.
Yep.
We're still early. These are base. Like you saw these bottoms, these are 8-year patterns. Like these are, even now we have 2-year patterns across the board. It's like we're not topping by any means. The market has a tendency to take its time more than we think, right? But I see that as a positive because most people were not like born millionaires. People are going to rush in at the door. I think it's Sprott who said that there. It's like, I want to get in early before in that room, because when everybody rushes in, that's when we get these crazy reverse temperature moves, right? That's when, let's say, oil closes above 150 or 60, I don't know when. And then everybody, oh man, I have to get in there. That's when it just it doubles. It's not time to buy when that happens. People want a fast profit. The millennials have been conditioned with cryptos. You just buy anything and I'm a millionaire. But this is the time to accumulate smartly. You know, as stuff is breaking out, you could buy these companies, these dividend companies. You could start doing a whole bunch of stuff. But I'm like you there. I see the end game is in 8 years, 10 years. And the longer they drag it out for the bull run to start, the better it is for me, because it's just going to be more violent and it's just going to last longer, the bull run, you know? I'm in no rush. Like, I know I'm 46. I understand people, they're in their 60s. I know that, but it's like the timing's here. We can't force the market. As much as our vision, we kind of see where we think the future is going to go. You need physical, guys. Seriously, like, even if I say it's not time to buy silver or gold, I own gold and silver also, like physical. Like, I'm not going to mess with that, you know? Is if SPX is going up and cryptos is not going up, that's a warning sign, because the next time SPX goes down, it could get really ugly in crypto land. If cryptos start really outperforming SPX, or NDX, NASDAQ, that's positive, because cryptos have broken down versus NASDAQ, for crying out loud. So if you can't even outperform the tech stocks, why even bother with cryptos? Might as well stay with the NASDAQ, you know? And silver and Bitcoin has broken down versus gold versus silver. Silver, man. Bitcoin broke down versus silver. It's like nobody loves silver. Silver went from 26 to 20, and it still outperformed Bitcoin in the past year. Michael Saylor's not talking about that. Max Kaiser, I'm naming names. They're not mentioning that silver preserved your purchasing power better than Bitcoin the last year. It looks super bullish for silver. You look at the silver, Bitcoin divided by silver, you say, Jesus, man, I want to be long silver. Buying the bottom does not mean I could buy higher than the bottom. I could wait for some confirmation. I could make as much money as you that you bought at the exact bottom. It's all about position size. It's about risk management. It depends how you do it, because a lot of noob traders, what they do is they get a bottom, they have 100K in their NAV, their tradable asset. I'm buying 100K of whatever. Bitcoin went down 30%, it's going up. And then they think that's how professional traders do it. No, it's not how you do it. That's horrible risk money management. You cannot do it that way if you want to survive, because they're putting 100% of their NAV in one trade, trying to catch a bottom. And if it goes up, it's twofold. They've developed the worst habit ever. Even if they manage by a miracle to pull that off, they've developed the worst habit that they're going to blow up their account because they're going to try it again, because they think that's how it works.
I think that what we just went through is very similar to 2001, like 01, 02. We're going to see a rally come on up with kind of both. And then I think the next time it goes down, gold and silver keep going.
Yeah, man, that would be so I think crazy.
Yes, that's my guess. And the reason is because inflation is going to be ridiculous, and then people are going to start worrying about currencies.
And we did not have that in the 2000s as much, right?
No, not even close. Okay. The 2000s is totally different feel. Do you agree or disagree? I don't know.
Yes, definitely. It's like, because I'm too young, like I don't even know like how it was in the 70s. I have the charts to get a feeling, but it's like I want to have recency bias. I want to give more weight to the closer price action I have. Like, let's say everything's financialized and they have the same playbook as they did in the 2000s. But I cannot dismiss previous 40-year cycles, like that 10-year yield chart, it broke out of a 40-year. I have a whole bunch of charts. I think we went through this a few times. 40-year patterns are breaking out. So that brings us back 50s, 60s, 70s. So
if you pair that up, and I don't think people understand the energy crisis yet. I think they still think it's solvable, that we'll just fix it. No big deal. We're just going to go get a bunch of these metals. Everything's fine. What I think is going to happen is we don't have metals out there. They don't exist. Like, we can't go to what they think they can go to in the size that they want to go. So the copper doesn't exist, the nickel, and just go on and on with whatever mineral you want, lithium, graphite, just whatever. Even we can start doing synthetic graphite, but you're going to run out of some sort of mineral somewhere to go to a renewable world. If you've got the pressure and energy, that is what caused the 70s. It was money in the system and the pressure of an energy constraint or metal, energy constraint in North America. Then what people worry about is the currency. They say, oh my gosh, we don't have the energy. Our currencies are predicated off of future growth, and we don't have the energy for future growth. What this all means that they're all overvalued. So the stocks dive because they're all short commodities and energy. And then the currencies are next because they say, wait, if a currency is a future promise to pay something in the future, but that promise to pay something in the future isn't coming. So they're going to say, oh crap.
We have a difficulty accepting like good things could happen to the complex, which I think is pretty bullish to have that feeling. We don't feel invincible, right? We don't have a Michael Saylor with a flame torch saying leverage and leverage your house and buy Bitcoins at 65,000. We don't have a guy doing that yet. We have guys like you and me, you telling like, this is cheap, I'm buying, it's tough. But the next opportunity now in sugar and the gold and silver miners, I overlaid the gold and silver miners chart to sugar. It's practically the same. So if you think there's manipulation in gold and silver, well, maybe there's manipulation in sugar also, because those charts, they're the same. I have no explanation other than capital flows. They leave growth and they go towards commodities and hard stuff. And it's just like cycles that repeat over and over. It's like, I don't know. You've noticed this, like charts, they all look alike in the commodity complex. Like some look more like oil because they're energy driven. Some look more like the metals because for whatever. But it's either you look like those type of charts or you look like a growth tech stock. It's like one or the other. It's all financialized. It's like the perfect word. I think you coined that. It's all financialized. Yeah. So it's money goes one place or the other. And I think the game changer, the needle that decides where the railway goes, it's inflation. Actually, it's a SPX breaking down versus inflation. That is for me, that's what's guiding my whole mindset and my establishment of probabilities that were correct for the next 10 years for the gold and all that stuff there, name it, uranium, copper, blah, 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 everything,